As I said yesterday in a tweet, I said, you can't get me excited about 64,000. I did see some people were celebrating $64,000 on Bitcoin. I can't celebrate 64,000 on Bitcoin. Not when we've come from 125,000. But I suppose there is a silver lining in it. I think the silver lining is that we're now above, or actually we're just again, just below the 200-week moving average. So can't get excited about that. As it relates to Bitcoin, I mean, I saw two headlines today that, Trump has now declared the Strait of Hormuz a U.S. territory, believe it or not. Absolutely crazy. Also, the SEC was supposed to have a meeting tomorrow, but they're not going to have the meeting tomorrow. They canceled this crypto and prediction market meeting tomorrow. So as I said, right now, I can't get excited about that. The one thing that does get me really excited, and this is what I want to speak about in this show, is what we spoke about yesterday, and it's the new money that's basically coming into crypto. So yesterday we did a show, and in the show yesterday, we spoke about the new capital that's going to come into crypto. I said to you that the old cycle was very much the Michael Saylor cycle. The new cycle is actually completely different. The new cycle is Wall Street and their model portfolio allocations. In other words, saying, if you put 2% of investable assets into Bitcoin, this is what happens. You get another $1.2 trillion flowing into Bitcoin, which will increase the market cap by between 5.6 and 11.1x. And that's the part that really excites me. And the reason why that excites me is because I believe we're at the end of this cycle. And I believe we're heading into the beginning of the next cycle. And I think it's pretty clear what the two cycles look like, right? So I think it's pretty clear that as this cycle ends, the Saylor era dies out. And then basically what we get is we get the new cycle, which is the more diversified Wall Street capital actually allocating money into Bitcoin. And you can see, again, Saylor's probably spent $1 billion on Strike, on STRC now, still trading at $94, not going back to $1, which is really a sign of what the market is doing. We also saw a whole lot of new buyers. And yesterday, I saw another tweet that says Jane Street owns $1 billion worth of Bitcoin ETFs. I don't know if it's a good thing or a bad thing, because remember the last time that they owned crypto, they started to manipulate the crypto markets. What I do like, though, is this. I said to you yesterday that what I'm seeing Wall Street, specifically funds in Wall Street, or the smart money, starting to allocate capital to two types of crypto projects. Obviously, the first one is Bitcoin and ETH, and it's the L1s with the ETFs. But we also saw this, which is, it said that Stan Druckenmiller's office publicly disclosed that they own $23 million in 𝗏. Now, 𝗏, for those of you who don't know, is a hyper-liquid treasury company, digital asset treasury company. And they own it, so they own 23 million. Now, for those of you who don't know who Stan Druckenmiller is, guy's one of the most prolific investors of all time. He's on Wall Street, he's like a quasi-god on Wall Street. 30% annualized returns for 30 years. Now, that is impossible. 0 losing years from 1981 to 2010. Helped Soros break the Bank of England in 1992. Made $1 billion on the British pound trade. Started, I don't even know how to pronounce it. How do you spell it? 𝗙𝗏𝗧𝗏. I don't know how to, with $1 million and grew into $12 billion. Closed 2018 profits while markets were getting destroyed. So you have this prolific investor, and this prolific investor is now making investments indirectly into crypto altcoins. Now, the reason why he's buying the crypto altcoins is because normally funds don't have the mandate to actually buy specific crypto protocols. And that got me to thinking about where Wall Street is actually going to deploy their money. And I think it's really important that we discuss where Wall Street is going to deploy their money. Why? Because the next cycle is Wall Street. And they're not going to be deploying into the same protocols that we deployed into to get here. They've got a very specific set of criteria in mind. And actually, excuse me, what you can see when you look at the charts is that they're actually starting to deploy into those coins. So if you look at what the coins are doing, you can see that there are a certain number of coins that are outperforming Bitcoin. So if this is Bitcoin over here, which is this orange one over here, and you look at all the other coins, there are a bunch of coins that are actually starting to outperform Bitcoin. You can see them on the bubbles. If you go to the bubbles and you go into the 1 month or whatever else, you really can see which tokens are being allocated to right now. And there's a good reason why the tokens are being allocated to. The reason why the tokens are being allocated to is because these are tokens with metrics that Wall Street actually understand. Now, let's talk about what Wall Street doesn't understand. Wall Street doesn't understand Ethereum's supply or Solana's supply with the burn divided by the burn with the network effects. They don't understand that. They don't understand ZK Sync's tokenomics and all. They don't understand those things. What Wall Street does understand is they understand client base, a growing client base. They understand a growing revenue base, and they understand a mechanism like a dividend to give money back to token holders. That is the extent of Wall Street's understanding of tokens. And when they look at a token, they're going to be looking at tokens that basically fit those criteria. And so if you want to outrun or to front run the smart money, basically what you got to do is you got to say, which are the tokens out there today that fit the narrative that Wall Street is going to be buying? Which ones have a growing user base? And specifically, if you want to be more specific, if you're getting a user base that's growing with network effects, and when I say with network effects, I mean where every additional user is adding the value to the network exponentially. Are they generating revenue? And if they are generating revenue and they do have a mechanism and they do have a growing user base, the main thing is, do they have a mechanism to pass profits to the token holders, right? So yes, if you've got a revenue base, that's great. If you're generating, a user base, that's great. If you've got revenue, that's great. But if you don't have a mechanism to actually pass the revenue to the token holders, then Wall Street doesn't understand it. They can't make a financial model around that. And so those are the tokens that are actually going to perform. And so the first step is, I basically said, okay, look, let's go look at all the revenue generating tokens out there. And there's quite a few crypto tokens that are revenue generating. Specifically, most of the tokens are actually applications on top of layer ones that are killer applications that are generating revenue because they found a good product market fit. So I think the best one when it comes to that is Hyperliquid, right? So you look at Hyperliquid. Hyperliquid, it's a L1, yes it is, but actually it's a decentralized perpetuals exchange, and it's found amazing product market fit. Everybody's using it, and therefore it has a growing user base. So it ticks criteria number one. It's generating a lot of revenue, and well, does it have mechanics to pass on to its users? Of course it does. So let's just quickly look at Hyperliquid. I mean, obviously everyone knows what Hyperliquid looks like. It's a decentralized perpetuals DEX. But look at the user base. Look how the user base is pretty much growing exponentially, right? Look at how the revenue mechanism actually works, right? So they've got the revenue, and they've got, so let's say here, they've got the actual revenue chart, and then they've got the buybacks, the buybacks and burns, right? So effectively, ultimately, this becomes the perfect token for Wall Street to accumulate. And that's why people like 𝗙𝗏𝗔𝗏𝗪 are actually accumulating it. Why? It has a growing user base. It makes money. And there is a way, a clear way, where Hyperliquid actually buys back its tokens and burns the tokens. And therefore, token holders actually benefit from it, right? And so what we did was we put together a spreadsheet of the tokens that basically meet the criteria. Now, there's a couple here that I mean, you could say should meet the criteria. Like, for example, like Near Protocol. Near Protocol should meet all the criteria. The problem is they're not buying enough. They're not buying enough tokens back from the market right now, right? So we looked at the actual revenue generating tokens that have a good product, are increasing in users, have got amazing product market fit, and have got a mechanism to actually give value back to the token holders. And I think that these tokens are the tokens that have the best chance of being the best performers in the next cycle. Or some of these tokens have got the best chance to be. Someone says BNB on the list. Yes, you're right. We can add BNB onto the list. The reason why we didn't is because it's very much a layer one. Whereas these are, as you can see, most of them, barring Canton, which I'm going to speak about in a second, is not really a layer one. It's crypto dApps that have great product market fit, right? So let's look at, like, for example, I mean, the king of the king of the hill here is Hyperliquid. Why? Growing user base, probably the best product market fit in crypto at the moment, between that and pump.fun. Generating a lot of revenue. What are they doing with their revenue? They're buying back. Someone says, what about Lighter? Yes, we have Lighter, but Lighter is very, very, very small when it comes to like in the big scheme of things. So you got Hyperliquid here. And again, I'm giving you some ideas. Obviously, this is not an exhaustive list. If this was an exhaustive list, it would be much longer. I'm giving you some ideas of tokens that you may want to look at. And I think what you want to look at here is you want to look at the total monthly buyback divided by the market cap, right? Because if they are burning, like for example, Uniswap is burning 0.2% of their total market cap every single month, right? Pump is burning 1.26% of their market cap every single month. Ponds, which we'll talk about in a sec, which I think is, I'm not going to say, I think it's slightly miscalculated, so to speak. And I'll show you that in a second. So the king of the hill here is Hyperliquid. That's why Wall Street are starting to buy Hyperliquid. That's why people like Stan Druckenmiller are basically saying, look, I understand this. This is a mechanism. It grows. It's growing in terms of users. I understand how they make their revenue. They make their revenue of trading fees, etc., etc. I also know I can do a calculation. I can speculate the number of users. I can speculate everything else, and I can get to a point where I understand how this protocol is making money. Let's look at another one, which I really like, and actually is flying today, and that's Venice, right? So Venice, for those of you who don't know, it looks like this. It looks like Grok, basically, and you can pretty much ask Venice anything that you want. The only difference between Venice and a normal LLM is that Venice doesn't store your questions, right? It doesn't store. You can ask things privately without your conversations actually getting into the hands of OpenAI or getting into the hands of governments and stuff like that. Now, this has been, I think, one of the biggest success stories in crypto, right? Now, Andre in our Discord picked this up. He's been posting about this like very, very, very often, because I think he's made a lot of money out of it. But what's the idea here? So they've got a massive, massive, massive user base. In fact, they came out and they announced that they have 4 million users. How many other crypto apps have got 4 million users? Okay, not many. Not only that, they came out and basically said that their revenue revenue is projected to grow from 107 million to 337 million, right? So let me show you the actual numbers here. Let me just find that. Yeah, so basically they're saying, they're talking about their current annualized revenue is $107 million for a crypto project. That's $107 million. And they've got a buyback and burn mechanism, which is, so the flywheel has basically already started working, right? And so again, this is why a token like this is basically running. Why? Wall Street are going to understand it, right? They understand the use case. It looks and feels like ChatGPT, which everybody uses every single day, except it's got a USP. The USP is, the unique selling proposition here is that you can browse privately without your data being shared, right? I mean, there was a little bit of controversy around, the fact that Eric Voorhees actually raised money by selling equity in the company. And people say, like, if it's a token, why does it have a company? Why are you muddying the water between a token and a company? I've had some chats with Eric on Telegram about this, and I think I buy the story here. And so this has actually been one of my biggest bags. One of my biggest bags today is Venice, right? Why? Because 4 million tokens, as the user base, 4 million users, as the user base actually grows, so does the token burn actually grow. The token burn actually grows exponentially, because that's how the protocol is designed, that it doesn't grow linearly, it actually grows exponentially. To me, this is one of probably the best use cases in crypto at the moment, right? So that's another one. I mean, another one that we must talk about is Pump, right? So if you look at Pump, I mean, you can love or hate the trenches, but ultimately that's where people are going to get their dopamine now, right? And what we had Noah on our show, and we spoke about Pump and the whole pump.fun narrative. The bottom line is Pump have got a very fast growing active user base, right? You can see the active user base actually starting to grow. They generate a lot of revenue, and they do daily buybacks and burns. 50% of all the revenue is allocated to buyback and burns. Again, it just ticks all the boxes. Growing customer base, tons of revenue, or growing revenue, and a mechanism to give back the value to the token holders. Pump tick all the boxes, and that's why right now Pump is actually flying, right? Now, I try to like show you how effective the token burns are. So at the current pace, Pump would be buying and burning $262 million worth of tokens a year. But there are only 1 billion dollars worth of tokens in circulation. So 1/4 of all the tokens in circulation are going to be bought back and burned by Pump. Okay. So again, when you have a limited supply of tokens in circulation, And there is a buyer that's coming in and buying $262 million a year. And again, it's programmatic buying. If you look at Pump's revenues, let's see if we can quickly get a dashboard here. But if you look at their revenues are, I mean, that's the buybacks and that's the FDV. Let's see if we can find a revenue. Active wallets, live pump. Hold on, let's see if we can find maybe token terminal. Okay, I don't have a revenue chart, or do I have it here? There we go. Pump fund revenue, pump fund buyback, pump fund revenue by product. So that's their revenue. So you see they're doing about $1 million a day worth of revenue. Like literally, they're doing $1 million a day worth of revenue. Take $1 million a day worth of revenue. They're buying back $500,000 every single day, more or less. Over a year, $260 million a year. And then you've got yourself, like, again, that's why this token is running when the whole market's not moving and Bitcoin is not really doing anything. That token is running, right? So you look at like Pump over here. Pump is burning back 1.626% of their total market cap tokens every single month. Again, huge. There is another launch pad called Ponds, right? I don't know how many of you have been tracking Ponds. Ponds is like the launch pad on Robinhood. To be honest, I'm not a holder of Ponds. Not one of my tokens. Why? Because I know I shouldn't say this, but I'm not sure I'm buying the whole Robinhood story for meme coins. I think meme coins are going to live on pump.fun, and I don't know if they're going to live on Robinhood. Yes, you can say, okay, they had the success on CashCat, but I'm just not buying this story at all. Yeah, but if you do, if you are a fan of Robinhood, you want to take a chance here. This has been as high as $64 million market cap. It's now at a $28 million or $20 million market cap. And they do have a buy and burn mechanism. Now, just like, again, the numbers here are maybe a little bit misleading. And the reason why the numbers here are a bit misleading, because they've got such a small circulating supply, because they haven't started circulating their tokens. When they do buy back after a busy month, it makes it look like they're buying back a lot. Again, I say, like, I'm looking for more like long-term consumer applications. I'm not sure if Ponds has got any competitive advantage. So, like, for me, not really one that I'm looking at. This one, to be honest, is one that I'm looking at. It's 𝗙𝗓𝗓. And the reason why I like 𝗙𝗓𝗓 is because they basically, they used to be like a restaking, an ETH restaking protocol. Now they've become like a full neobank, right? And for all this time, they basically neglected the token. So all of this time, they basically neglected the token. But now they've actually got a plan, a set plan to actually buy and burn tokens, right? So they are making revenue. The revenue in the last 30 days is 11.48 million. So that's, growing in terms of number of users, growing in terms of revenue, and they've got a buyback and burn mechanism. You see, I mean, I'm not going to read you the whole buyback and burn mechanism, but 100% of all revenues generated from ETH withdrawal fees, etc. So basically, they've got a set plan, which is exactly what investors want, and that's why if you look at the 𝗙𝗓𝗓 price chart, that the 𝗙𝗓𝗓 price chart actually does it. The one that I do like, to be honest, and I think kind of like if you want to play a Wall Street portfolio, you got to have Uniswap in your portfolio, and I'll tell you why. I mean, so Uniswap is the original DEX. It's the one that Wall Street like, etc., etc. When Robinhood launched, you can see that Uniswap was the biggest custodian of all the volume, and again, they've got the driving force from the fee switch, which came on July 27. The fee switch was officially activated. This led to explosive growth in the protocol's revenue for the entire network. Daily revenue surged from $118,000 to $318,000. Why? Because a lot of it was Robinhood, but because they now have a buyback and burn mechanism. So what am I trying to show you here? I'm trying to show you that there are a whole lot of protocols that if you're smart, you can get ahead of Wall Street. And you can buy them now because this is what they're going to be buying in the next cycle. Some of them may seem dead. Things like Jupiter. Jupiter's dead because Solana's dead, but it does have a user base and it does burn tokens. Another one which feels like it might be, let's just say dead, is Aerodrome. Why? Because Base feels dead. Base feels dead because Robinhood Chain had its moment in the sun, and everyone said, "Oh well, there's Robinhood Chain. Why do you need Coinbase Chain?" But I think Coinbase Chain will come back, or Base Chain will actually come back. So that's it. I want to show you two more protocols. So the first one is cards. I got to be honest, I'm quite a big holder of cards at the moment. And the reason is that this is a protocol that has an incredible, unbelievable business. Like a really, really, really good business. And the token has done pretty well. The problem, I mean, just to give you an idea of their revenue, their fees are $80.5 million annualized. Okay. So like it's a real, what they do is they trade real world assets. In other words, they keep the cards in a vault, and they trade a token that represents the cards. That's essentially what these guys do. The thing with cards is the problem is that they've got a very good revenue model, but they haven't got a very clear buy back and burn revenue model. So that it's almost like, there's a wallet that buys back. It's not set programmatically. No one really knows how they're buying back and burning. And so the market's basically punishing this. But if these guys are smart, and I suspect that these guys are quite smart, what the hell is that? Wow. Yeah. So, if these guys are smart, what they'll do is they will switch on a programmatic token burning mechanism, and then basically that will drive a token price up. One more that I want to talk about, and that's Canton. The reason I want to talk about Canton is because Canton has a very unique buyback and burn mechanism. Canton is I want to call it a layer 1 blockchain that unites a whole lot of other layer 1 blockchains. It's call it like a token for the intranets of the Canton chain, so to speak. The reason why I like this is because 100% of the gas fees go back to a buy and burn. And that's, I think, quite unique for any kind of layer 1. Now, again, this is a token that I've bought recently. The reason why I bought it is because the price chart has done that. And because there's a Canton on the 15th of September, which is in a month, they're having their first, like DevCon, their first conference. And I think that when that happens, when the DevCon happens and they have their first conference, I think they're going to highlight a whole lot of people that are using it, and that's going to drive the token price up. Also, I think the tokens are very, very, very tightly held. So that's what I wanted to show you. I wanted to show you the tokens that I think are going to do really well in the next cycle. I really more wanted to show you the formula. And the formula is like, are they growing in revenue? Are they growing in users? Is there a way to actually give the users the money back? If yes, then it's probably something that you should be looking at in the next cycle. Now, I know that in this cycle right now, you're kind of going, what, do you want me to think of the next cycle now? Like, we're not even through this cycle. There's so much more pain that's happening in this cycle. Truth is that the smart money is actually positioning themselves now. You're not waiting for the market to turn. You're not waiting for the smart money to front run you. You're actually working on a thesis, and you're laying the bed now so that when the market actually starts running, you can basically chill and just watch your investments go up. Let me know what you thought. I want to show you something else quickly. So, we are, I don't know if you guys have noticed, but I've been posting a lot around a Twitter website called 247. So I want to show you this, what it is, and I want to walk you through what it is. So this is 247 Newswire. We actually own 247 Newswire. What is it? It's a newswire. What is a newswire? A newswire delivers news to you before anyone else does. And that's exactly what 247 Newswire actually does. What it is a data feed or a news feed where we know what news actually moves the markets because we use AI. And AI has basically gone through millions of news sources, and it tells us which news sources actually move markets. The next thing we do is we build what they call a scraper. Now, what's a scraper? A scraper is something that goes and fetches the news directly from the source. Now, the source can be Twitter, it can be the SEC's website, it can be a filing app, it can be MicroStrategy's website. We have thousands and thousands and thousands of sources that basically scrape news, right? And they deliver the news to you, to you guys, either in a data feed or in what we call a terminal here, right? So this is the terminal. This terminal is constantly scraping for news. The minute that a news article comes out that may move the markets, what it'll do is it'll actually tell you. So, for example, Trump, they're talking about Trump token, and what it does is it scrapes the ticker and allows you to pre-program trade sizes. Like I've programmed $1,000, $500, $5,000 long and $1,000 and $5,000 short. You connect your normal exchange, so Blowfin, Bybit, BitGet, all the exchanges basically you can connect. You can connect any exchange you want. And then when news actually comes out, ultimately what you can do is you can trade directly from the news in milliseconds, right? So I'll give you an example. If you want to trade the Trump token because you think that there's a piece of news that comes out, you get it delivered to you in milliseconds. See, that's it takes like 2 milliseconds to deliver the news to you, 20 milliseconds to deliver the news to you. But ultimately, you can take a position here before anybody else takes a position. So there we go. Now I'm long and I'm short. Let's give you guys some volume. Let's see, can we do a volume here? Where is the volume? Oh, here's the volume button here. Okay, so basically when news comes out, it'll make a noise, and then I can take a trade. So look here. I'm long. Okay. Okay, I'm short. Okay, let me make it softer because I don't want to bash your ears. Where did I find the? Okay, here it is. Yeah. So this is a news terminal. The reason I'm showing it to you is because if you get news quicker than anybody else, it gives you a real advantage. And now we've got a very, very, very real advantage on anybody else in the market. Why? Number one, we've got an AI, a proprietary AI that has scraped millions and millions and millions of sources and tells us which news actually moves markets. Two, we deliver it to you guys faster than anybody else gets it. Like I've posted multiple times how much faster we're delivering the news than any other newswire out there. The third thing is, and you can't see it here, because there hasn't been any news that has actually moved the markets. But ultimately, when there is news that is about to move markets, the AI actually warns you and says, this is a high impact news story. I'm trying to see if we can find, I mean, the markets are so flat that there's very few high impact news stories right now. Now, as I say, the advantage is that you get served the news, and then you get served the news, and you can trade directly from the news terminal in seconds. Or milliseconds. Let's see if any news comes out. Anyway, reason why I'm showing it to you guys is every time it makes that noise, it means that there's, hold on, where is the news story? It tells me that then there is news. Okay, let's see. Okay, so like for example, it says 𝗙𝗘𝗔𝗧𝗪 has launched a securities, and it talks about the fund, and it picks up all the assets that are mentioned in the fund. So, hold on, the developer is telling me you need to click on 247. Oh, I'm looking at the wrong feed. Of course, I'm looking at the wrong feed. There we go. Okay, now I'm looking at the right feed. Okay, so now there's news that's come out on this around the block. You can see this news has got 4 tokens mentioned in it. If I want to react before anybody else, bang, bought $1,000 of AVAX, bought $1,000 of ETH, bought $1,000 of SOL. If I want to close the positions, I just go here, close, close. Okay, so you see how it works. Now, in days where there's lots of news, interest rate news, etc., you really get an advantage over anybody else because you can trade faster than anybody else. Okay, reason why I'm telling you this right now is we've got a special for you guys, which basically gives you guys access to it free for 2 weeks. We've got a special for you guys, which basically okay, so go here and go to 247 terminal and click on this thing over here. And go and sign up. You get 2 weeks for free. After 2 weeks, if you don't like it, just cancel your subscription. Just go and cancel your subscription. But trust me that, when there is news, and if you want to become a professional trader and you want to be able to trade the news, then this is probably the best news feed on the market out there. It really is. It's the most tradable news feed on the market. You can see here, the AI knew that there would be no impact. So as I hover my mouse here, it basically says, okay, Trump drops map of Hormuz, Okay, so again, here it basically says there's an oil trade. Now look here, I can trade oil, I can trade stocks. So if I want to trade oil, bang, I'm long oil. And I'm short oil. You can literally trade directly from the terminal. So you can just literally sit here and just trade every time news comes out. So I want you guys to try it because I really think it can give you an advantage in trading. It's a 2-week free trial. Literally 2-week free trial. After that, if you want to join, if you want to stay, then it becomes $99 a month. If you can't make $99 a month trading news that quickly, then I don't know, something's wrong with you. No, seriously. Okay, like the Litecoin Foundation just integrated into Beltex. If I want to trade Litecoin, bang, I'm long Litecoin. And I'm going to close that trade because I don't ever want to be caught long Litecoin. All right, you get it. Go and test this news terminal. This is going to be this is the best data feed on the market. I guarantee you that. This is the best news feed on the market. You can get it for $99 and you can trade directly from the data feed. If you're a company or you're a fund, reach out to us because we do sell the data feed to companies and funds separately, right? So we do that as well. But I think if you want a competitive advantage, you want news delivered to you in milliseconds before anybody else actually gets the news. Literally, this is where you get it. All right, my friends, on that note, I'll see you again tomorrow. I've got a big show for you tomorrow. I'm bringing on a guy called Dana Love. Oh, hold on. Something just happened. See you again. Something happened and the NASDAQ was mentioned. If I want to trade NASDAQ, bang, I'm long NASDAQ now as well. All because I've integrated my Blowfin account. You can integrate your Hyperliquid account. So Hyperliquid, your Binance account, you can integrate all your accounts, your OKX account, go and integrate it, and then you can basically trade. Here, look here. So I just want to show you this. So Trump posted today. Let me show you. Trump posted, and look how much we were faster than the next person by 4 seconds. Now, in 4 seconds, that's the whole. I just want to show you how, in 4 seconds, I would have bought, I would have sold, I could have been out of the position in 4 seconds. And that's the power of trading through a news terminal, and especially this news terminal. So listen, get in touch if you want an enterprise grade feed. Otherwise, enjoy this feed. This is a really good feed. It's free. Try it for 2 weeks. Connect your exchange. And then if you want to keep it after that, it's $99, which is like nothing. All right, my friends. I'll see you guys again tomorrow. Until then, trade well, my friends.